Cryptocurrency world made a $26 billion loss in 24 hours. Hello there, how are you doing today? Welcome back to another pocket-growing edition on Worldwide Wealth TV, where we introduce you to exciting investment opportunities. Wherever you are, don't forget to subscribe and hit the like button because we want to know we're making you smile. Hit the bell button so you'll get notified whenever we bring you new and excitingly wealth-revealing topics on the new frontiers in wealth and investment. Cryptocurrencies are very much in the news at the moment. Volatility, recent hacks and the threat of taxation all add to the uncertainties surrounding them. And yet, despite these difficulties, interest in cryptocurrencies still remains high and the long-term outlook, according to many commentators, is very rosy. With that said, cryptocurrencies remain controversial. While critics including economist Paul Krugman and Warren Buffett have called Bitcoin evil and a mirage, others, such as venture capitalist Mark Andreessen, tout them as the next internet. For every person declaring that cryptocurrencies are in a bubble, there's another insisting that they are the next wave of the democratization of finance. At their simplest, they are merely the newest fintech fad. Yet at the most complex level, they're a revolutionary technology challenging the political, economic, and social underpinnings of society. In 24 hours, nearly $26 billion wiped off cryptocurrency market following massive cutback on oil prices, reported CNBC. As per the data from CoinMarketCap.com, market capitalization of cryptocurrencies was down by $26.43 billion from a day earlier at around March 1, 1:17 p.m. The sell-off went downhill as the day went on. At around the same time, Bitcoin, which is the biggest digital coin by value, tumbled down by 10% in 24 hours. The aggressive sell-off in the crypto market comes as international oil benchmark Brent crude futures plunged to its lowest level since February 2016, 30% to $31.02 per barrel. That was ignited by Saudi Arabia slashing its official selling prices for oil after OPEC could not come to an agreement with production cuts. Many have concerns if this could trigger an oil price war. Brent has since pared some of its losses. Several other big digital coins like Ethereum, XRP and Bitcoin Cash posted losses of double-digit percentage point. Regardless of the losses posted Monday, Bitcoin has gained around 9% year-to-till date. Big movements in the prices of cryptocurrency is not new, as digital coins is susceptible to volatility in crypto market. Some market players, however, believe that it could be a perfect opportunity to buy Bitcoins. Pulsar found that Bitcoin's price is correlated with the volume and sentiment of comments on social media. And interestingly, the price volatility follows, and doesn't precede, the comments. Patterns in social media conversations signal forthcoming Bitcoin price movements. How can this be? It's because online discussions stimulate interest in, and action around, virtual currency. Spikes in online conversation volumes frequently precede spikes in web search volume by 1 day and spikes in price by 2 or 3 days. Over the full period of Pulsar's research, there was a strong and statistically relevant, R equals 0.6, correlation between conversation levels and a rising Bitcoin price. This is borne out by analysis on the Investopedia website, which gives 8 reasons for Bitcoin's volatility. 5 of these are: bad press, fluctuating perceived value, fluctuating perceptions in method of value, investors reacting to security breaches, and high-profile losses drive further losses. Unfortunately, the dataset is relatively limited, as real online interest in cryptocurrency and Bitcoin in particular really only started in January last year. So it is impossible to extrapolate future price levels for Bitcoin and other currencies. However, as long as the current level of interest is displayed in online channels, it is fairly certain that cryptocurrencies have a very viable future. Bitcoin, the biggest cryptocurrency by value, fell over 10% in 24 hours at around the same time. As earlier stated, the violent sell-off in the cryptocurrency market comes after international oil benchmark Brent crude futures plummeted 30% to $31.02 per barrel, its lowest level since February 2016. That was sparked by Saudi Arabia slashing its official selling prices for oil after OPEC failed to agree a deal on production cuts. This has led to fears of an oil price war. Brent has since pared some of its losses. Meanwhile, stock markets in Japan and Hong Kong fell sharply while US stocks are set for a steep drop at start of trading on Monday. The other big digital coins Ethereum, XRP and Bitcoin Cash posted double-digit percentage point losses. Despite the losses posted Monday, Bitcoin is up around 9% year-to-date. Huge moves in cryptocurrency prices are not unusual, and these digital coins are known for their volatility. Market players, however, said this could be an opportunity to buy some Bitcoin. For those who have long-term investment horizons, Bitcoin is absolutely a buy during these dips. Jehan Chu, co-founder of Kinetic Capital, an investor in blockchain startups, told CNBC. We can expect more of this volatility sparked by macro health and financial shocks, but ultimately long-term investments in the digital future and its key asset Bitcoin will be a winning strategy still. Given the volatility of this emerging phenomenon, there is a risk of a crash. Many experts have noted that in the event of a cryptocurrency market collapse, that retail investors would suffer the most. According to Mohammed Damek, S&P Global Rating Sector Lead, for now, a meaningful drop in cryptocurrency's market value would be just a ripple across the financial services industry, still too small to disturb stability or affect the creditworthiness of banks we rate. So, let him that hear clearly and invest wisely.